Hey guys, welcome back to the channel. I just wanted to do a little video today, kind of going through some price patterns that you can look for day trading, and so these are patterns that I use in my day trading. It's things that I look for. I'm going to walk through stuff that I look for in the pre-market, what qualifies as a good stock to be trading, and then what are some of these price patterns that I look for that are very, very high success rate trades. And so I'm just going to walk you through a couple of these that I actually took last week. And so I kind of already have them all charted out how I took them. And yeah, let's get right into it. So the first thing that I want to look for in a stock that I want to be day trading is liquidity. I want something that has a lot of headlines around it, whether it's for an earnings report or whether it's a constant news flow around this index or ticker. For example, AAL, constant news flow, right? It's very highly traded at this moment in time. So it's pretty much every day. Any of your airlines, cruise lines, these stocks are going to have high liquidity, and so they're going to react to price levels well because there's going to be a lot of participants in that market. So that's the first thing I kind of want to look for. And a couple ways to do that is to use a scanner. And so what I do is I look on my scanner for the average volume for each day that a stock will do, and then I look at the pre-market volume for that stock in the day, and I can just sort by highest percent done, basically. And so if a stock is trading 5 to 10% of its average daily volume already in the pre-market, then that stock is probably going to be in play for that day because there's already been a lot of volume done. So that's kind of what I look for. And then here's the day in question. Here's the day that I was trading AAL. One of the days was right here. It was June 10th. So it's going to be this day right here where we opened under this red zone. So the price pattern is pretty simple on a stock like this, and we're going to go over one on Lulu. I believe it was pretty similar, but basically you want to, because there's high liquidity in these stocks, there's going to be a lot of participants, and it's pretty simple, guys. You want to look for a gap down or a gap up, and a stock that's doing good volume in the pre-market. Okay, pretty simple. Then from there, you want to look at maybe a 30-minute chart like this. Doesn't really matter if you have after hours on or off. If you have them on, it might help even more to kind of see the after hours action and see where people are buying and selling there. But basically, guys, you want to look, okay, well, what has this gap done to other traders that are participating in this name? Okay, so this gap down, what it's done is it's put a lot of buyers underwater. So you have buying. Look at how much they're buying for about 3 days, right? They're buying around $18, maybe slightly higher, $18.50, but they're buying all around this area. And so what this gap down does, guys, is it puts a hell of a lot of people that are buying this stock. And this is important because look at this run up it had and think about the hype that it's created. Think about it, the hype that it's created, especially in retail chat rooms and retail alert services that are trying to buy the dip on this. I can tell you, I know several people that have told me that they're buying AAL, and I haven't really commented on it because I don't see why you would do that. Especially after this run, right? They're talking about buying AAL in here, and I'm like, okay, I don't know if I agree. But you think about the psychology of that. So there's a ton of people in here, right? The volume, it's been much bigger than it was trying to buy this dip. And so what this gap down has done is it's put all those people underwater. So that's really the simplicity of getting the idea, guys, is there's a gap, there's good volume being done, and has it put people underwater, either on the long or the short side? And that is where we can begin to trade against it. So already we're going to have a bearish bias going into this day because we know that there's buyers underwater and they're probably going to be looking to get out. And eventually it's going to create a liquidity event on the downside, creating some panic selling. And so next thing I look for is in the pre-market, how is it trending compared to the VWAP? So in this pre-market session, it was under VWAP the entire pre-market session. That indicates it's very weak. We had a pop up. You can see the volume come in here on that pop up, and it gets rejected right back below VWAP. So it's pretty important. And so we know it's really weak. And so what we can do is look to be very aggressive on the open. We're going to go over another example real quick where we're not directly under VWAP. We haven't been trending under it the whole morning. And that is you want to take a different approach to trading something like that. But when you see that something cannot hold over VWAP and lots of buyers are underwater, that means sellers are completely in control and you can be aggressive off the open. Okay. So really simple how I would play this, guys, is I'm looking at a 1 minute because you want to be able to capture small amounts of information at the open. You don't want to be on a 5 or a 10, or you won't be able to see all this. You won't be able to get in quick and get out quick. But really simple, guys, there's the pre-market low. And really simply, if I know this is really, really weak, I'm going to be looking for a break of the pre-market low and I'm going to get in aggressively. That's really it, guys. So if you wanted to, you could maybe short where they were selling up here in the pre-market or just short the VWAP. So that's another option. You could just get in here and you would have to, maybe set a stop above these highs here. And then if that didn't work, try to see if there was a reversal up here. But again, this is typically a setup you're going to want to be really aggressive on. And you just want to sell basically around where these people were buying. Right, so they were buying around 18. What does it do? It spikes up towards 18. Doesn't quite get all the way there. But here's your sell signal. Big red bar, cuts out the pre-market lows. You already know it's weak. You know there's lots of buyers underwater, and this is going to start a liquidity event. It's going to start a trigger of stop losses, a trigger of panic selling. Okay. So what I would do is I'd get in here. I'd probably take about half off around my next level here, and that level was really just around these highs. So we came up, found resistance, we gapped over, and so typically when you get back to that area you may see some buying, but because so many people were underwater here, what I did was I held some, and I wanted to look towards where they were buying, right, towards where they were buying before this breakout. So they were buying around 1630 down to this spike down here at about 16. So I knew somewhere between like 1630 and 16 there would probably be potentially more buyers, and that would be a pretty sizable drop. So I'd be pretty happy with that. And again, if you see price coming down here and then it starts to get above VWAP and it starts consolidating and holding, that might be where you want to exit. But when you actually see it rejecting VWAP here, I'd consider adding to a position here with a stop above VWAP. If it starts holding above VWAP, then you get out, right? If it just spikes above and then you see a sell candle come in and it recaptures it, add on. Okay, add on. It's important. You can use VWAP when liquidity is high like this. VWAP is usually very consistent, and so you see a rejection here off VWAP, but this isn't necessarily a place you'd want to be adding in short because you've now seen buying off this level. It's pretty impulsive here, and you see this rejection, but then you see it kind of tightening up and then boom, breaking up. Once I would see this, I'd want to be out of my short. You don't really want to be in that anymore, and then maybe you look for, again, a move back up to these supply levels where buyers are underwater and look for some more shorts up here. But that's how I would have played it as I did play this. It's pretty simple on this one, guys. Look for a gap, look for nice volume being done. And this is going to apply to all of the plays I go over. And just look to look to take the other side of the trade where these people are underwater, because they're going to cause a nice liquidity event like this, and you're going to be on the other side of their trade, which is the right side, guys. And yeah, so that's really that trade. And now we're going to go over, let's see, Lulu. Similar type of event. The reason I was trading this was because they had earnings. So what does that do? Look at the volume. It brings liquidity to the stock. Okay. This is another really simple one, guys. Whenever someone has earnings, take a moment wherever they gap to or whatever. If they have a range like this, guys, you want to be marking where were people buying it before the earnings release and where were people selling before the earnings release. And so if they like gapped up here, what I'd want to do is I'd want to mark, okay, where were people selling before the earnings release? And so it's probably one of these two areas here. So you had people kind of selling, right? And then there's one level a bit higher where they were selling. So those, if you happen to gap over, these are where the sellers are underwater. And that's where you'd want to look for a buy on the way down, because these sellers, they're just going to want to get out, right? They just want to get out. And so what happens is you get people covering as it comes down towards break even. They're like, shit, let me get out. And so you get people covering, and then you get people buying as well, because they're like, hey, Lulu's up, like it's going parabolic, it had earnings. And so buying leads to buying. And then once you get up here, then you get into the pain period, right? You get all these shorts are really, anyone that hasn't let go is getting really shot out, right? They're getting hurt. And so they cover, and that leads to even more upside. And then you're up to, then you're up to like probably double this range. You take this range, it's 16, you double it, then you're up at 340 before you know it. So the same thing happened, guys, but it was on the downside. Pretty simple. Look at where people were buying Lulu before this gap down. And so they were buying it here, and they were buying it here a couple times, right? They were buying it around this area. 2 times. That's really where the big buy came in here, and that's kind of where they supported it at the end of the day before the earnings release. And so, guys, this is an example where price is not trending below VWAP in the pre-market. And so what we want to do here is we have a short bias, but we want to be patient. So we've identified some levels, and this is where I just kind of want to watch, okay? I want to watch a stock. I want to watch how it's behaving at these levels, and I don't want to be too aggressive to just jump into a huge position. And it's pretty simple, okay? And I'm just going to add a level kind of where we stopped. Right, this is kind of an area where people were buying before the big run up, and then people were buying kind of all in here and here, and then we shot up. Okay, so those are kind of 2 areas where you could look for targets. Another way to look for a target is to simply take this range that we were in. Like we said, it's $15. You double it, and here's $30. So it happens to be that first level. So that's a good way to get targets as well. Anyways, what we're looking for when we're looking for a reversal is some sort of impulsive move down that either breaks out of a bullish pattern, right? You want to look for some bullish pattern, right? Some bullish pattern. So Lulu, it's really simple. You're just waiting and waiting. You're waiting for it to come to your levels. So it starts getting around the level, and you see this. So this is like a bull flag, right? It's a bull flag, and here it tries to break out. Right? It's holding above the pre-market high. It's holding above the initial spike, and it's a bull flag, so it's going to try to break out. What you want to look for here is a complete failure. And so the first thing that I see is right here, right here. What would make me want to get short a little bit here, not a full position, but a little bit, is you have a high. You have it try to break. You can see the wedge, right? It's a downtrending little wedge here. It tries to break out, and boom, complete failure, right? Back below the wedge. You don't necessarily want to get in right there, but you want to notice, hey, there's a lower high now. It's failing to really break out of this. And so maybe on a retrace here, you look to get in. You get in pretty small here because we're still trending above VWAP, right? It's still a bull flag. It still could break up, but maybe you get in small here because you see we're starting to put in lower highs. You put your stop above the high, okay? And then here is where you really get aggressive, because now you have the pre-market high and all of these buyers here. This is the same concept, guys. All these buyers are underwater now. And so it's really simple. Now you see this spike up, and you don't get afraid. You don't get afraid. You enter right here, because now this area where everybody was underwater is going to become, right? It's pretty simple, support and resistance, guys. But it increases when you have all this volume coming in, right? Look at all the volume right here. This is people buying, guys. See so there's lots of people that have bought on this day right in here. And so when it gets down here, they're all underwater, guys. So that's really important to note. You don't really have too many sellers that are underwater. You don't have any, right? You maybe got some here, but they're not really underwater because they're still green here. And so these are the people that are really underwater here, guys. Really simple. You sell that area. You sell that area when it comes up. You put a stop, right? You're making lower highs. Put a stop above the recent high. You get above that high, you're completely out. And then as you see a failure to hold over VWAP right here, you can add even more to your position. And then it's really simple from here. There's a low. You take some profit at the low, and you leave one to run, guys. And so this turns into a really nice trade. This was a 115% trade on the option contracts. They were a week out, so they weren't same days. They were a week out, and they were 115% gain. And this is the simple kind of price patterns you want to look for. Look how it's acting in pre-market, and that can tell you whether you want to be patient or aggressive. And then when it does finally start holding under VWAP, that's when you really need to get aggressive, guys. Here's another great place to add right here. Look at this. Look at this, guys. Right? Really simple. Bear flag, right? Pop up towards VWAP. Does it fail or does it keep holding? Boom, right here, when you fail back into that flag, you load up the boat, okay? Load up the boat. And then you capture this move with even more capital than you already had. So hopefully that helps, guys. Hopefully that helps. Last one, real quick. Beyond Meat, pretty similar situation here, guys. This one, I'm not totally aware if this had news or not. I'm not sure. Didn't really care, but I just knew that it had a lot of volume on this short squeeze, and I knew that it was tradable, right? It was tradable. It was liquid. There was a lot of volume being done lately. And so, guys, this one does take a bit of macro analysis that I did. And so it's pretty simple. I just look for gaps. And so you can see right here, gap, that I have labeled. And so that's simply from over here, you have an open gap, right? It's open and it wasn't filled with price yet. And then right here, you have the same thing. You gap down from this area and price has not come back to visit that gap yet. So I always mark those, especially when price is close to them. And so what you can see over here is that when price comes up, it closes over these gaps and it continues closing over both the gaps. And what I noticed on this day was that we were opening right here underneath the gaps. And so what that does is it means it turns the sentiment into a short. And so you also have, like I told you guys, these buyers up here that have been buying beyond for the last 2 days, thinking it's going to the moon, that are now all underwater. And look at the volume that was done during these buying days. So they're really underwater here, guys. Pretty simple, okay? Buyers are underwater. Sometimes the sellers are underwater, and all these, the buyers are underwater. Excuse me. Okay? Pretty simple. So what you want to do is you want to look at where these people were buying. And I had them marked as green because I was actually looking to buy in these days. But basically now they'd be turned red, right? They'd be sell zones because now those buyers are underwater. Okay. As we come up here, you want to look at the open and say, okay, well, it actually is pretty weak in this open, but here's the thing, guys, there's not a lot of volume being done. So you want to be careful reading too much into pre-market data when there's not a lot of volume being done. So you can see it's really scattered, right? There's a lot of just tick marks. They're not, it's not very liquid this morning. So typically that would go against my rules, but I really liked this setup. And so all I did was I just wasn't aggressive on the open and I waited for my levels. I wanted to see it at my levels, and then I kind of got more in depth and wanted to look for a trade. So yeah, this one's really simple again, guys. So you just look where the buyers were underwater, and as it's coming up, you want to look for signs and signals of that trend change. And so as I saw it coming up, I knew it wasn't quite there yet, but what I saw was sellers here were already kind of getting strong. And so I wasn't in, but I saw these two lows be created, and I started drawing a trend line. And so this is actually from a 5 minute, I believe. Yeah. So I started drawing this trend line here. And right here is where I added into my first bit. So I see sellers kind of, it's wedging essentially, guys. The buyers are clearly weaker here. It gets up into this gap and it quickly rejects. And that's when I'm looking for this trend break. We don't quite get it. I'm thinking, okay, maybe we're going to the top. But no, then we get this. And so then I can simply enter with a stop above, right? Above the high or above this gap, whatever. And so I'm in a partial position there, right? Because again, we're not trending below VWAP, so I don't want to be in my full position. That's really important about all these setups, guys, is that VWAP is your best friend. And typically when you have an idea like this, when you think it's going to be a short or a long, you want VWAP on your side if you're in a full position. So you don't want to be in full up here, because what if it runs up and goes up here, and then it fizzles out, and then tomorrow it fucking dies, right? So you want to be really careful if it's not in your favor below VWAP if you're trying to sell. So I'm in partial, and I see the impulsive break below VWAP, and not only is it a break below VWAP, it's a break below this gap, it's a break below pre-market high, and it's a break below the two pivots. We came up, pivoted, and then we got above, pivoted, and so it's a break below both of those pivots as well. This is putting buyers underwater. Everyone that bought up here, and they're kind of holding, thinking, okay, it's going to keep going. Oh, now they're getting a little worried. And this, I'm going to go back to a 1 minute here. This right here is where you add in huge to your position. You start holding under VWAP, tightly consolidating, a beautiful bear flag, sorry. Beautiful bear flag, and look at the gap in between my daily levels that I have. This is what you want to see when you're going to add. You want to see it consolidating underneath a level that you have with huge room to your next level. That's beautiful. If you're trying to get bigger in a trade, you want to see that huge gap between levels. And so, yeah, really simple here. You get bigger, you get way bigger on this trend break, or you can even get bigger. You can try to just short the VWAP, right? You could just get a good entry here and then maybe add some more on the break. And then your stop is simply, you want to see it get above and you want to see it hold above VWAP. You don't want to see this, right? This is getting up, struggling, getting up, struggling, and boom, that's where you'd add on to your short. But if you see it get up and it's really just, it's just above it and it's just kind of starting, then it's starting to break out, you get out, you get out. That's your signal to get out of any additions that you added down here. And you can see, guys, this trade was a beaut, right? It went down, overshot my first level, came all the way to the second. I wasn't holding through all that because that's a lot of time, a lot of theta burn. You don't want to be holding through that. But guys, hopefully, I don't want to make this too long, but hopefully this helps you guys. These setups work on the upside as well, just looking where sellers are underwater, keeping an eye on that pre-market volume and how the VWAP is being treated in the pre-market. That can tell you whether you should be aggressive or patient. And yeah, that's really it. Hopefully this helps you guys. Go ahead and try to find a setup like this in your trading this week, right? Find something that's very liquid and look for these signs. Look for a nice gap and either buyers or sellers to be underwater, and try to take the opposite of their trade to ride out that liquidity event when they're trying to get out. Okay, that's essentially the gist of this strategy. Okay, so please drop a like and sub and all that good shit. And I'll see you guys in the next one. All right, peace.